Hi everyone. Today I wanted to talk about Visa, a stock I'm planning on buying more and more throughout 2023. I want to talk a bit more about the company, some of the history of the stock, and why I'm looking at adding to this position for next year. Let's get into it. So, a bit about Visa's business. Obviously, they are a payment processor. They have a network of networks that can electronically move money around the world, no matter what country you come from, where you are, what you're buying. They get, depending on the type of transaction, it could be 2 to 5% of the cost of an item from the vendor. When you go to Starbucks, buy a coffee for $5, 25 cents of that may be going into Visa's network that Starbucks is paying them for them facilitating that transaction. And then lots of the times they have to split that with other parties, whether that's the bank that issued the card or other parties at play. But you kind of get the sense that on every transaction, even if quite nominal, Visa's picking up a handful of cents here and there. So it's really, really interesting to see when you take a step back, all of that has added up to about $30 billion of pennies getting scooped from orders for the service of facilitating these transactions quickly and electronically with a lot of trust. You also get a great sense of the scale for the business here. On under 30 billion in net revenues in 2022, they have delivered net income of 15 billion. So over 50% net income margins after they pay tax really goes to show how efficient, how scaled, the type of operating leverage that Visa has and how prudent they are from a financial point of view. They've also been really global, or they also are really global. You see the amount of currencies they've done transaction processing in, over 160, which is 80% of the world essentially, and probably over 99% of the actual global economy in terms of geographies. And they also are very good and very passionate about returning money to shareholders, primarily through share buybacks, but they also have a dividend that's been increasing pretty rapidly over the last number of years. And they're growing. They're growing really fast. You can see revenues up 22% versus last year, income up 21%, some FX headwinds in there. It would really be even stronger income growth if it wasn't for that. Volumes and transactions up double digits, and they're returning the capital to shareholders at a really fast clip as well. So across the board, this company's really been rolling. It's really been rolling since it got public in the late 2000s when it got spun off by a handful of banks, I believe, that used to co-own the company's network. But we'll get into more of that later. Going into all the places that Visa plays and where there's opportunity for even farther growth to continue to accelerate their glide path, the biggest component, or I guess the most consumer-facing component to understand, is consumer payments. So continuing to move more and more money around the world by facilitating these electronic transactions. Still, a huge percentage of the world uses cash for transactions. I'm not sure if it's improved a bit, but I believe last year it was like 80% of global transactions are done in cash. So there's huge opportunity to drive a lot of efficiencies, speed of service by rolling out card transactions and across credit and debit across the emerging economies of the world, but also in developed countries. We've seen a really nice trend of more and more consumer payments going to card year over year. So I think they have a long runway of growth there, both in developed and in emerging markets. New flows is something they talk about as well to layer onto that organic growth, where they're looking at ways that new types of payments can enter the network, more unconventional type of payments. Think about like paying your rent on a Visa card, making payments to the government making payments to an end consumer, a peer-to-peer transaction instead of going through a PayPal or something else potentially being done through Visa. So they're really looking at all different kinds of transactions and how money moves hands and how they can bring that into their network, slice a couple pennies off of each of those transactions, and just continue to grow what percentage of the global economy they essentially have a tiny royalty on that's spitting out into their revenue. And then more the corporate banking side, value add services, they continue to work with their partners. They're very closely tied into the banks. Like I said, Visa used to actually be owned by a conglomerate of US banks, I believe, that would use their network to help facilitate these transactions and stuff. So they have very close ties, and they continue to work on how they can better serve those customers. So just reading off a few here: advisory services, risk and identity solutions, acceptance solutions, issuing solutions. So I don't really understand the full grasp of what each of these buckets may mean, but it's good to know that they're looking at how to accelerate growth on a number of different forums to really continue growing at the rate and hopefully exceed the rate that they've been growing in the next decade. Taking a quick look just at their Q4 performance here, it's really been up across the board this year, very consistent with their annual performance. Revenues up 20%, net income up 10 to 15%, depending on if you're including one-time items and stuff like that. They did have a bit of a currency hit, once again, US-based company, obviously, but operates extremely globally. One area that they've had tremendous strength this year is the return of cross-border transactions. So you see inside of Europe, it's been 50%. Total cross-border transactions up 36%. So those tend to be a big part of their business as people travel outside of their country. Instead of getting a lot of local currency, just use your Visa card. And there's also foreign exchange fees and stuff associated with that. So it's a great place for them to have a strong presence. Overall, I think this is just to show that the company, despite the economy over the last couple of quarters slowing down, it seems like the organic trends behind card transactions and people moving to cards has made it so they're still able to continue on a really healthy growth rate here. This is an interesting visual that just shows, cutting out all the noise of, everything that happened in 2020, the bounce back in 2021 as well, with everything opening back up. This is really showing what are payment volumes on Visa's network today versus 3 years ago. And you'll see the total is about 50% higher than it was. So tons and tons of growth on the network, despite the stock price only being up about 10% in that same time period. So the stock, we can look at valuation later, may have gotten a bit ahead of itself at times, but the operation of the business has really continually been growing and getting stronger and stronger with time. I know, the stock and the company sometimes are disconnected depending on what forecasts are and stuff like that. But the actual year-over-year performance of the company has been really strong. And lots of that strength continued into 2022. So this is just despite a mute economy. I think it was essentially flat in Q3. We've seen Visa still grow almost 10% in terms of physical cards that they have out in the system. Each one of these cards, once it's out in the system, is essentially just an incremental profit center as people use those cards and continue to bring in network fees across the board with all the transactions that are going out. So having an additional 300 million cards in the network this year versus last year means 300 million more cards out there in the world that people are taking part in commerce with, that will ultimately flow into that $30 billion number for total revenue for Visa. One of the things I love about Visa is just how efficient the business is. The money comes in at the top, but it's really not too many expenses. They've been using a very similar network for a long time. So CapEx isn't too expensive. They have a relatively, I say relatively lean workforce, given the size of their business. When you compare like revenue per employee to like a big tech company, they're much more lean than those companies. But you really see that show up here. In just Q4, they did $6 billion in cash provided from operations. 300 million of that was in CapEx. So we're talking about like 5% of cash provided from operations going into capital expenditures. That's like a really healthy ratio that maximizes the amount of capital that can get returned to the shareholder. So you're seeing 5.5 billion of free cash flow just on the quarter for a company that's between 400 and 450 billion dollar market cap, depending on the way of the market any given week. And that's pretty indicative of how they've done year to date as well. 19 billion in cash provided from operations, under 1 billion in capex. Almost all of it's getting returned in free cash flow. Once they get that free cash flow, so $18 billion year to date, they're really turning around and giving the vast majority of that to their shareholders. 12 billion in buybacks, 3 billion in dividends. So they really don't need the capital, and they really don't need the cash to invest in all kinds of projects. Just a couple examples, like Meta taking all of the free cash flow from the advertising business to try to build out a metaverse, or for a while, Disney taking all the free cash flow from their profitable business to build out streaming and try to compete in very expensive content. They're essentially taking that free cash flow away from potential dividend share buybacks that will go into your pocket as a shareholder. Visa's not going and building or trying to expand their business in any indirect way. So we're getting all of that high free cash flow flowing back into our pockets as shareholders through buybacks, which increase your share of the company, obviously, or dividends, which just go into your pocket. And I love that for a simple business model. There's no need to go and try to get into a million things. You have a lot of growth runway ahead of you just on their core business. Just continue to buy back shares, pay out a little dividend. I think that's a great capital allocation model. Going into the operating highlights here, it's great to see across the board, everything obviously is funneling down from just total payment volume and funneling down pretty nicely. So we're seeing 11.3 to $13 trillion, 13 trillion to 14 trillion. So this is like 20% growth, another 7-8% growth, 22 to 21. So you're seeing very strong growth rates year over year over year. And this has really grown at the same clip in terms of an index for over a decade now. So pretty reliable trend of growth with people moving to card. And we see similar growth on the revenue line. So 22 billion to 24 billion, 29 billion in 22. I think the higher jump on revenue versus payment volumes really driven by those cross-border numbers really jumping, because when Visa's able to also charge you for the foreign exchange, that's just a higher royalty they're getting on those transactions when it's not done in the end consumer's home country. So that's why it's a bit of a disconnect. But generally, when you look over time, the payment volume transactions and net revenues tend to be somewhat in line. Revenues trending a bit higher as they adjust fees and stuff like that, and look at how they can build incremental opportunities to grab a piece of those dollars. But generally, a healthy payment volume transactions equals healthy revenue. And we saw from the prior slide with how much of that flows into the bottom line, healthy revenue equals healthy net income here, with about half of every dollar they're making flowing back into your pocket. So we talked about how the company's been allocating a lot of dollars to buybacks. That's their primary use of capital over the last decade. Um, it's really interesting to see, lots of companies do share buybacks, do it for a year, 2 years, 3 years, quarter over quarter. Visa over the last 12 years, despite you know things like the pandemic in 2020, other things that have gone on over the last 12 years in the financial space, fear of recessions, like scares in the market and the economy, Visa has consistently bought back shares every single quarter since essentially they went public here. So you're consistently owning more and more of the company as the company is consistently growing their revenue and profit. So you're growing a larger part of a larger pie quarter over quarter. And that's really helped their shares to be able to compound to the level they have over the last, 12, 13 years since going public. I think this is a really powerful visual when put out over 12 years like this, going from 4.5 billion shares at their IPO to about 2.1 to 2.2 billion shares today. You essentially own 2 times as much of the company as you did if you bought at the IPO. The dividend as well is another area that I want to talk about, but just holistically on how they've been able to compound shareholder value so well. Um, they are really up there with the best companies. I know they don't have as long of a history as some companies since they've IPO'd in the last 15 years, but the amount of compounding they've been able to enable through just strong core business performance have not got boggled down in a million different things. They didn't try to reinvent the wheel, build a new universe, anything like that. They have been able to 10x their stock price in the last 12, 13 years. Their dividend is up over 14x, albeit still very small as they like to do share buybacks. But you've seen those share buybacks deliver a 50% reduction in share count over 12 years. So I guess on average, that's 3-4% a year of the company you're owning more of. You're also getting a percent dividend, give or take 0.8, 0.9%. So there's a lot of just natural value that you're getting passed through the system that is totally incremental to just the long-term growth potential that Visa has as a player in the global economy. So it's interesting because when we look at all those things, you think like, wow, Visa has proven themselves to be a great returner of capital. Their business has grown tremendously in terms of revenue, profitability, income, total payment volumes. But when we look at how they've done over the past 5 years, they're really moderately ahead of the S&P. So it's obviously hard to navigate stock prices over short periods of time because in 2017, who knows if Visa was just way overvalued to begin with at the start of this chart. So data can be misleading sometimes, but generally speaking, I think Visa has performed really well. It was expected to perform really well. It was baked into their forecast, but it's been in a bit of a rut where it's traded somewhat sideways. And I think as they continue to grow at the pace they're growing, it's just a matter of time until they break out again. And that's part of the reason that I do hold Visa shares. It's a relatively small portion of my portfolio, but I do own them. And I'm looking to make them into more of like a mid-sized to large position throughout 2023, depending on where the stock price goes, obviously. And we'll talk about that later as well. But this is just interesting to see a company can like blow it out of the water. It doesn't necessarily mean their stock's going to double over a 5-year span, depending on what is priced into the stock already. So everyone should keep that in mind, not even just looking at Visa, but looking at lots of these other companies out there, or, why people are shocked when Tesla goes down 70% after what was priced into that one, as just a random example. So keep that stuff in mind when buying companies. Just because you have a positive outlook for them, that doesn't necessarily mean that you're going to get gains on their stock if you don't understand exactly what outlook is already anticipated for that business. Couple comments on the balance sheet. Visa has about $30 billion in current assets, $20 billion in current liabilities. They make 15 to 20 billion in free cash flow a year. So I'm not concerned about their 20 billion in liabilities at all. It's pretty much like 1 times their annual cash flows, and they have a pretty strong current asset position. So this is a pretty strong balance sheet all in all. Puts the company in a really good position to continue to do continue to do buybacks, as well as grow their dividend on a double-digit CAGR in the short to medium term, with no problems at all. So I think they're positioned pretty well here from a balance sheet perspective, which you'd assume given how much money they return to shareholders out of their as a percentage of their free cash flows. One thing here is Visa's tried to do a few acquisitions recently. Some of the really small ones have gone through, just like very small tuck-ins in certain parts of the world, I believe. But all of the larger ones, Stripe specifically, has been blocked as a lot more scrutiny is going into this space of payment processing and stuff like that, with Apple getting into this game and everyone else. So they're really trying to protect the startups in this space. So just something to take note of. They likely will be mostly a growth organic growth story, not really opportunities for significant acquisitions, I don't believe. But I think there's still a lot of runway there. And the fact that they can't buy back companies just maximizes the money that they're providing back to shareholders. So I believe Stripe was about $6 billion. I'm sure they had a penalty for breaking that contract, but they essentially turned around the next quarter and said, we're putting the 5 point whatever billion that we are going to buy Stripe with into our buyback program, and just bought more of the company back for shareholders. So it's rare that they're able to do tuck-ins. They have the balance sheet to do something small if they wanted, but it's definitely not something they're like building up a treasure chest of capital to do, because it likely won't get passed, and it's probably just not worth the focus, not worth the potential fines or break fees and stuff like that. So yeah. Looking at analyst predictions, analysts are thinking next year is going to come in somewhere between $8 and $9, let's call it. What's the low estimate? $8, high estimate $8.50. So $8.50. I actually think these are pretty light estimates, based off of what we've seen with return to cross-border in the back half of the year and just the strength of their core organic growth rates on payment volumes, despite a 0% growth rate for the economy. But we'll get into that later. And then in 2024, let's call it $9 to $10 in EPS, according to the analysts. This is, I think, a chart, 13-year chart. You can just see the earnings per share growth, how they've been able to compound growth pretty consistently over time, over longer periods of time here, despite also paying out an increasing dividend. Lots of this is the buyback, but a lot of this is also just organic business growth and turning into like a global behemoth within the payment space that they've really become since going public. Okay, so looking at the company's PE ratio, because that's really what this comes down to in terms of how big of an opportunity is there here. Why is this a buy for me? We're going to be talking some pretty high P's here, much higher than I tend to be comfortable with. And that's why, transparently, this is a relatively small position for me today. It's just been very hard to buy Visa at a 30 to 40x PE. I see the growth trajectory, but lots of it's already priced in. And that's why over the last few years, I've nibbled on it, but I've never been able to make it a really big position, just because there's been a lot of opportunities in lower PE names where I get a higher percentage of my capital returned right away. But I think Visa's gotten increasingly interesting. Nonetheless, I think it's always worth reviewing the PE history of a company, seeing where it's gone from, where it is now. So looking at Visa here, it's always traded very rich. Lots of the things we talked, their moat of being essentially partners with the bank, being part of an oligopoly in the credit card industry, having a royalty business on the global economy, being as diversified as they are across different types of payments, online, in-store, debit, credit, geographically diversified to every country with a real economy. This is like an amazing business, and it trades like an amazing business. So between 2017 2019, the company was mostly trading, trading between 30 and a 40 PE. Most of that was between 35 and high 30s PE. So very high price to earnings multiple you're paying to own this stock. During 2020, 2021, interest rates came down, valuations for growth exploded. The company went all the way up to a 50 PE, which is pretty insane. And then in December 23, the stock hasn't come down too much, but the earnings have exploded. So the PE of the company is much lower. I think just doing some quick math, they made $750 last year in earnings. So if it was at a 30 PE, it would be like 225, and it's at about 205 right now. So we're trading at about a 27x 2022 earnings. And if they grow to be, I think some analysts had them around $9 to $10 next year. If they actually do $10, then they're going to be trading at a 20 PE, whereas historically they were trading in the 30s. And I know when we talk PEs, it's really also, will interest rates keep going up? Will growth continue to get devalued? I think long term, over a decade, 2 decades, as long as interest rates are, somewhat reasonable and they don't go to like rates we've seen in undeveloped countries, buying Visa at a 20x current PE or forward PE is a steal with a company that has a decade of double-digit growth baked in and a income or gross margin model that has a lot of almost no variables that can include higher capex and things stealing that revenue to income levels. So overall, I think the company is pretty cheap when looking at what they may be able to deliver in the next couple years and ongoing versus where they're trading today. So if I was just to summarize that, in 2022, they did about 750 in actual EPS. I think we were saying that's probably a high 20s multiple on current year. Next year, I have them doing about $8.60 in EPS. And I think it's very fair to have a forward-looking PE on this stock at 30. Still below what it historically traded at in the 30s, up to 40, and then up to 50 even during 2020, 2021. I won't go there. But I think 30 is a very fair premium to pay for a company of this status. And then 2024, I think they'll probably come in close to the high end just based off of the historic EPS growth. The fact that I know they're going to be buying back between now and 2024, probably another 5% of the company in buybacks. So growing this level of EPS doesn't necessarily mean growing net income at this rate. You have that tailwind of lower share count. And I think that even 2024, buying the company at about a 25 PE, given where the company's traded historically and the growth they still have ahead of them, is very reasonable, very fair. So to get to these multiples, I'm looking at about a $260 price target of where I think the current price of Visa would be, fully valued, let's call it. And we're currently trading at about 200 to 210. So there's about 25% of upside here that I see in Visa. It's not crazy. It's not going to be a stock that goes up 200% given its size and the type of business it is. But I think there's a good opportunity to have position here that outperforms the broader market and the indexes. Um, some other things here, just in terms of the value of the company, we talked through this more indirectly, but just quality of these earnings. It's essentially just as the global economy goes on, people spend money day to day. Visa's business grows. In addition to that, lots of the transactions and the value that Visa brings to most businesses of being able to do speed of service, not have cash on hand, tracking and analyzing their business performance when they're doing sales, time of day, and all of that is just no real reason why Visa wouldn't continue to grow their presence in the global economy. So they're just really well positioned. The quality of the business, the quality of the earnings is very high. There's very low risk on margin compression to a great degree, and yeah, it's just a great business. Their performance history has been second to none on how well they've been able to buy back shares, increase dividends, increase income and revenue growth. They have a moat that is essentially untouched with other than them, MasterCard, where they're essentially in bed with the banks on how they've been working together for decades and decades. The bank used to own them. All their systems are intertwined. Their networks are all intertwined. It would be very hard for someone to come out and get the kind of scale and network and trust that Visa has in the global economy to pull off the type of operations that they have. So unbelievable moat. Category tailwinds, talked about that on quality of business. And then their balance sheet's also very strong. So just one of the best types of companies you can have, check marks across the board. And that's why I'm giving them a 30 forward PE, which I'll rarely do. Every business has risks. Interest rates rising obviously could impact the valuation, which I don't care about too much because I'm not really invested in treasuries or things like that. But I understand how it can change the net present value equation for forward-looking profits. So that's a valuation concern. It's also a potential risk of having a weaker consumer. As interest rates rise, people may not be going out and spending money as much. They have such an efficient operation that Visa is going to make money no matter what economy there is. It may just not grow at the same level, but it's very hard given their structure to lose money unless everyone started going back to cash overnight, which isn't going to happen. So I still feel comfortable holding this stock in an environment with a weaker consumer. If anything, I may take it as an opportunity to buy the stock at a cheaper value if it gets to that point. But that's definitely a risk to this thesis of a 260 share price. A travel stall, like if pandemic reemerged or something like that, cross your fingers. Travel is really a huge driver for card payments, and also a very profitable segment of the business. So that could have a bit of a margin hit if there's a travel stall. And then one area of the space that, I wouldn't say keeps me up at night, but I'm watching is lots of big tech and more fintech companies are trying to get into this space, issuing their own cards. Visa's trying to partner with lots of them, having, these smaller fintechs cards go through Visa systems and they get a slice of those revenues, just a smaller slice than their own cards. So they're kind of frenemies. I'm more worried about, Apple with Apple wallets, Apple credit cards, really looking at this as a huge category around the world. You saw some of the numbers we saw earlier, $13 trillion, $14 trillion of payment volume. These are huge numbers, even for a company like Apple. And they may want to get into this space and see what they can pull out of it. So that's one that they've invested in. They're growing in. They have good products in it. And I'm, a bit worried, but overall, I'm not overly concerned just because of the type of moat that Visa has today. So that's my thoughts on the stock. I think it's a great stock to own if you're a long-term investor, despite what potential headwinds may be ahead. It's one that you can go to bed safely knowing you own it. And I'm looking to add this to become more, at least a mid-sized position. But depending on how the value gets, I'd be open to making this a larger position in the portfolio in 2023. Thank you guys for joining me for this video. Just want to comment that I'm not a financial advisor by any means. This is just for fun and entertainment. This is just me looking at the company within my portfolio and doing a quick analysis with what I was able to find out there. Please do your own research before making any investments. And if you like this kind of content, you like this video, it would really help me a lot if you subscribe, like, comment. Would love to hear your thoughts on Visa. If you own it, if you don't own it, if you think this is too expensive of a multiple, if you like another card payment process company better, would love to chat it with you guys.